And welcome, it's Mary Ellen McGonagle here with your weekly MEM Edge show, the show where we bring you where the action is in the broader markets. As usual, lots to cover. Let's take a look at some of the topics we're going to be reviewing today. First up, as always, we are going to take a look at the broader markets, see where did we close the week. It was another choppy period, going through different industry groups, a little bit of rotation continuing to shape up. We're also going to take a look at some of the headline news that drove that price action this week. You'll want to be aware. All of this, of course, with an eye toward helping you prepare not only for next week, but going forward. We are seeing a lot of news that could impact some longer term moves here in the market. Show me the strength. And of course, my work with my MEM Edge report is all about not only uncovering where that strength is, but beyond. We want to uncover ways that you can potentially capitalize on that strength. So we'll be looking into that. Also, current price action following earnings. And there were some pretty significant, certainly well-known companies that came out with their Q4. Yes, they are still releasing earnings. And I'm using it as a proxy for earnings season, which will begin in earnest in 2 weeks. So you'll want to get a sense of what is moving these stocks after they report, what's working, what's not. So let's take a look at some of those headline news. We did see consumer confidence numbers. They came out earlier in the week and they rose for the first time this year. We're really only into April, but certainly worth noting in the face of high inflation. That number in turn did push consumer discretionary stocks higher. However, as you'll see, that move into discretionary stocks did not, for the most part, take hold. Consumer spending came in. It did rise slightly, which was really unexpected. However, the inflation fears were still cited. And most of the spending activity was in what I call leisure activity, a lot in the way of travel, hotels. Auto sales were down. That was worth noting because they've been increasing for quite some time here. Core expenditure price index. Now, this is a very vital inflation gauge that the Federal Reserve is paying close attention to. They are using that as their gauge for inflation. And it did come down slightly month over month. However, that annual CPE rating or data, it does remain really quite high, 5.4% on a year-over-year basis. As you may know, the Fed is targeting a 2% inflation rate. So this is something that is front and center as far as their monetary policy, and we'll get into that as we move further along here. And the unemployment rate, that was today, Friday, and it came in super close to pre-pandemic lows, 3.6%. And we did see wage pressures increase. Wages did surge. So that is another indication of inflation as certainly employers pass those increased wage costs on to the consumer. So that encapsulates the most certainly important as far as what was released last week. Let's take a look at how that moved the market. So first up, we're looking at the S&P 500 index, a daily chart. And here is that diciness. We did see a nice move earlier in the week, and it did end the week a little bit down, certainly because of some of the factors as it came into play relating to the market. So we can see this nice surge into midweek. And here we are with a daily price chart of the S&P 500. And you can see that we did start the week in a very strong rally mode. Certainly that consumer confidence number that came in was quite bullish. But from there, we did pull back. And there was a lot in the way of Ukraine versus Russia. There were peace talks earlier in the week that also got the market going to the upside. However, they did falter. And then other news as the week moved on, we did see the broader markets pull back into the close so that the S&P was pretty much flat for the week. Good news, it closed above this green 10-day simple moving average. We can look at these outside momentum indicators. Your relative strength RSI is above 50, trending higher. And then the stochastics, this is a faster moving momentum indicator, also appear in positive territory. So at the end of the day, the uptrend still in place here for the S&P 500. From here, let's take a look at those underlying sectors within the S&P 500. There are, of course, 11 sectors, and I have a 2-month daily price chart view here. I like to add this RSI. That's a relative strength indicator, and I want to sort it descending so that up in this upper left quartile, I am going to see where the relative strength is versus those areas, those sub-industry groupings that are down here in the lower portion of this screen. So I talked to you that mentioned that we are going to be looking at where the strength is, and let's take a look. Utilities, real estate, and staples up here in the forefront, the three horsemen, if you will, as it relates not only to a more defensive stance in the face of continued uncertainty relating to monetary policy, certainly the conflict in Ukraine. So really the other factor here is higher interest rates driving, but it's not every area in these groups. I did a deep dive. We'll get a little bit into it with our next segment here, but certainly subscribers to my MEM Edge report, I will drill down a bit further as to where specifically the strength is there and why. But moving right along as we discuss this week's price action, let's just take a quick look at healthcare. This is an area that my work identified a couple of weeks ago as reversing this downtrend. It was later to the party, if you will, but certainly strong in a nice uptrend. We'll get a little bit into where the strength is there as it relates to healthcare. This is another defensive area as it relates to investing with an eye toward areas of the market that will still see high demand for their underlying products, regardless of what may or may not take place with the economy. That's another area of the market where uncertainty is reigning. I will talk about that as well. But as we move on, we can see some of these areas. Energy actually was down 2% this week. However, if you watch this show regularly, you'll know it's been up here in this forefront for over 2 months. Certainly due a pullback, but still in a nice uptrend. Let's take a look at some of these weaker areas. Financials down over 3%. We can take a quick look here. I'll share with you where the weakness was in the financial area. So we did have that nice potential downtrend reversal, which did fail this week. Let's go ahead and move on and take a look at just where that failure took place, and we can talk about why as well. From here, I'm sharing with you some underlying ETFs as it relates to underlying industry groups is what I meant to say within the broader markets, and I use these ETFs. My work is centered primarily around capturing these high growth stocks as they move and advance. However, given the current dynamics in the markets, I'm not going to pile into growth just because that's where I tend to favor to get into these outperformers. I will shift with the market. And we've done just that with my MEM Edge report. Let's take a look. I talked about healthcare in that nice confirmed uptrend. We did identify Biotech's right back here when it did reverse this downtrend. Pretty good volume characteristics, and we are getting a nice follow through to that biotech area, and we will get into that further. Another area that I did want to point out to you, and this is going to have that impact on the financials. This is the yield on the 10-year Treasury. You can see it had a really big spike last week, pulled back this week. It is up week over week, but to be up above that 2% level, that was a real metric that a lot of investors were paying attention to. And then we closed the week at 2.37. So we can pull up a weekly. I'll just give you a little bit of relevance as to where that stands relative to precedents. And we would have to go back to pre-pandemic levels to see the yield that high. Now, high yields are having an impact on these various areas of the markets. It is all about the Federal Reserve's, their regime as far as they're now initiating and just beginning their rate hike cycle in an effort to quell inflation. So we are seeing these interest rates rise. However, there was another phenomenon that took place this week, and I talked about it in my MEM Edge report on Wednesday. That is the inverted yield curve. In other words, the difference between the 10-year yield and the 2-year when those shorter term rates advance higher than longer term. That is an inverted yield curve. Couple of things there. One is that it will very negatively impact bank stocks. This is KRE, the S&P 500 Regional Banking ETF. And this was one of the weaker performers. It was down 5% on the week. These banks, their profit margins are driven by a wide spread where longer term rates are high, shorter term rates are low, and they make their profit from that in the way of lending activity. So we can see this was the cross that financials had to bear last week with these bank stocks suffering. So let's move on and take a look at some of these other areas, because again, I have that RSI descending, and we want to, again, capitalize on areas that are showing relative outperformance. So we can see the indexes are up here in the forefront. There are other areas that are beginning to take shape. Actually, I did not have one in here, and we'll talk about it separately. But this is the IGV, the software ETF. Now, technology stocks gave up a lot of their gains. They closed flat for the week, XLK. But we did see some vibrancy in the software stocks, up about 1.8% for the week. So there's a little bit going on here. There are a couple of stocks that are managing to begin to reverse their downtrend. We're going to talk about a couple of them as it relates to earnings, as they did come out with, a couple of them came out with numbers this week. So let's go ahead and move on, talk about areas that did not fare well. Semiconductors down 4.4%, not what you want to see if you are on the prowl for the NASDAQ or for these growth stocks to really begin to take off. This is all about the pressures, certainly Russia, Ukraine. There is a very major component to the semiconductor chips that emanates from Ukraine. That's one of the reasons driving these semiconductors lower. So other area I want to point out before we exit this is the volatility index. And it certainly is diminished from these peaks here, but we are still elevated. It's at about 19.6. And generally for my work, I want it to be certainly below 18 to really give a sense that this is also known as the fear index, and make sure that investor sentiment is more certain, if you will. But the volatility is certainly heading in the right index. I'm sorry, the index is heading in the right direction. So good standing as it relates to that. We are going to take a very brief break, and when we get back, we have lots more to cover, so stick around. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. So as mentioned, we are going to be covering where the strength is. And first up is the real estate sector. REIT stocks, XLRE is the ticker symbol, and the group was up 4.6%. And this is relative to a flat S&P 500 and very strong movement here. A couple of factors: these real estate companies, these REITs, are required to pay in the form of dividends their shareholders, their free cash flow, and we can see that XLRE is in a very nice confirmed uptrend during periods of inflation. These REIT stocks will have a tendency to outperform. They actually have clauses in their leases that allows them to increase rent in the case of inflation. So I'm going to share with you an area, actually a number of stocks in an area of REITs that are really on the move. These are storage facilities. What is taking place here is post-pandemic, a number of these stocks fared really well. They were heating up. We are in a period of very high mobility among, certainly in the US. A number of these REITs I'm sharing with you are global, but it is all about that ability to store any excess goods in these storage units as individuals, not either they are working. Certainly my assistant is in Europe now. She's been really all over the world, but that kind of concept where these high demand for these storage units. We can look at PSA, public storage, and this particular company did, the stock broke out of this shorter term 3-week base just this week. Nice high volume characteristics, and you can see it's in a very confirmed uptrend. The stock does have a 2.2% yield. I'm going to go ahead and add a 5-day simple moving average, and this can be really helpful once stocks begin to really take off, because stocks such as this move in PSA on Tuesday tend to get ahead of themselves, certainly, and you will want to be on the lookout for an entry point. A pullback to this 5-day can be ideal for this type of stock. Let's take a look at another stock that is in this storage space area. This is Life Storage, LSI, a little bit smaller, but equally dynamic in the sense that it is in a very confirmed uptrend, finding support at this upward trending 5-day. The company offers a 2.8% yield, and certainly more attractive are these outside momentum indicators. They're not quite as stretched, giving the sense of further upside, eventually a base breakout at this 152.5 level. And for me, another characteristic that draws my eye to Life Storage is the fact that it has precedence. It can really sustain a nice lengthy uptrend during periods when the group is in an uptrend. So looking quite good there. EXR is another, certainly bigger one. Extra Storage is the ticker, a nice 2.9% yield. Same dynamics with LSI, where it is just now forming the right side of that base. Nice bullish outside momentum indicators. We can take a look at one last name, CUBE, and this company provides the storage units, delivers them right to your driveway, and then you can have them on hand if you're doing renovations and so forth. But again, that same concept where a lot of these REITs did peak in price and pull back. But when you're on the lookout for that downtrend reversal, you want to see that break above those moving averages with your outside momentum indicators in positive territory. This guy is the highest yielder at 3.2%, and that is where the strength is in these REITs. But we can look elsewhere as well for other real estate investment trust companies that are on the move. This is SBA Communications, and they're the third largest provider of these mobile communications towers. And I'm going to ask or pull up what's called a full quote here, because what you can do is go ahead and get that yield. The annual dividend is about 2.45 for SBAC, but similar phenom where it is forming the right side of this space using that 5-day as a pullback entry opportunity. And then another company that is a little bit smaller, they do provide warehouses in very strategic coastal areas in the US. This is TRNO, a nice 1.8% yielder, but I think you can capture and certainly see what I'm seeing as it relates to these downtrend reversals, nice high yields, and so forth. Another logistics storage warehouse company that is certainly one of the bigger growers within and among these REIT stocks. These guys are the largest. They do a lot with retail fulfillment. We can see that it is poised to break out of this nice 4-month base, nice momentum on the outside, momentum indicators there. And then see if we can just pull up another one in the same space. This is Duke Realty. DRE is the ticker, 1.9% yielder. And also that warehouse concept. They work with Amazon, Home Depot, UPS, a lot of big players. So I'm going to leave it at that, but certainly point made on those REIT stocks that are on the move. So from here, let's go ahead. I talked about earnings and surprisingly vibrant action as it relates to quarterly earnings reports. So I will share with you those that are relevant in the sense that I feel that they are portraying what is taking place as it relates to investors' response to earnings. So first up, we're going to take a look at the U.S., certainly in the U.S., the largest egg producer, really an exaggerated example, but this is Cal-Maine Foods, CALM, again, the largest U.S. egg producer. And they did come out with numbers. Take a look at this huge volume as the stock continues to spike higher, up another 6% on the day. But really what's taking place here is the company came in with earnings that were below estimates. However, sales were above estimates, and other dynamics such as the reason sales were higher, they were able to pass increased egg production cost on to consumers. So I won't get into the nitty gritty here, but there's a lot going on within the egg industry as far as no cage rules, and it's really increasing costs for these smaller producers. So CALM is expected to benefit from that. Moving along, another company that reported earnings this week is the Lovesac, Love, a furniture company, and they did report 20% above estimates, higher than expected on their Q4 earnings and sales. So this is what you want to be on the lookout for, in the sense that the stock had this huge gap up. However, that gap up faltered. You don't want to chase these stocks, particularly when they are just so down and out. They're not going to have as much in the way of the possibility to trade higher, unlike other stocks. So here's what you can do when you see these companies come out and gap up super high. You can then revert down to a shorter time frame. So this is a 1-hour price chart. When you see these gaps up, ideally you want to see the advance further for at least 3 more bars to indicate further upside. So when you see this is a 1-hour price chart. It gaps up, huge volume, and then very quickly falters in the end once it breaks below this 5 and 13-hour simple moving average. You're now really just out, not poised for anything on the upside, but you can be on the lookout for this kind of reversal as a possible reentry. But at this point, the stock does not look particularly compelling. We can take a look at another company that came out with earnings this week. This is Verint Systems, VRNT, not overly dynamic, but this is what we're seeing. Some of these software stocks are starting to break back above, and this one earnings driven. Earnings were above estimates, but sales below. Let's take a look at another software stock that is also more confidently in the throes of reversing its downtrend. This is Progress Software, And they did come in with earnings and sales above estimates, but I will tell you, one of the primary drivers of stocks that are more successful after earnings is the fact that they are guiding higher. Management guided higher, markets like it. So we can see it's in a nice uptrend. Let's take a look at another company that management guided higher into the year. Very sloppy chart, but this is Dave & Buster's Entertainment, PLAY. Earnings were below estimates. Sales did jump, but the outlook was positive. So you had this nice gap up. It's pulling back very orderly to this 5-day simple moving average. One last name that we can look at here is going to be another software stock. This is Paychex, PAYX, payroll, HR software. And they did come in with earnings and sales above estimates and also guided higher. Actually, I do. I didn't tell the truth. I do have one more. This is Lululemon. And I did want to point this one out because Lulu came in 31% above estimates. And most importantly is management's bullish outlook for the remainder of the year. So this is what we're going to be on the lookout for as we move through earnings once they really take shape and begin to report. And one other area I did want to point out to you, I mentioned the move into healthcare. So there was one sub-industry group that I did want to share with you, and that is the medical devices ETF. And this is a growthier area within healthcare. I already did point out to you IBB. We did add a name from that IHI to our MEM Edge report last week, and it was one of the top 4 performers in the S&P this week. So nice to see that continuation rally there as it relates to IBB. Now, this is the NASDAQ Biotech ETF. And what I wanted to share with you there are actually almost 800 biotech companies. However, there are a handful that comprise this IBB that are the heavyweights, and they are those biotechs that actually have earnings. Of those 795 biotechs, only 25 companies are actually producing earnings. This is Illumina, ILMN. They have not this year, but next year they're going to be putting out positive earnings. We can see this does take up 5% of that IBB ETF. And we can see it's in a nice confirmed uptrend, reversing its downtrend similar to IBB. The real winner here is a company that's been on the move for a while. This is Vertex Pharmaceuticals. Take a look at this gorgeous base breakout. It's the kind of thing you just, for me, I kicked myself. I saw it materializing, and here it is, certainly off to the races. Nice confirmed uptrend. From here, you're going to want to use this earlier uptrend as your precedence, certainly for length, because you can see as far as how high and how long it may extend that uptrend. It can get into this overbought with the RSI up above 70 and retain up there for some time. So really what you're going to want to be on the lookout for is those signals that this uptrend has reversed. This was simply a pullback. It found support at that 50-day and then back into a nice uptrend. So I believe I am very close to out of time, but I do want to thank you for watching. Those that haven't already, use that link below. You'll want to trial my MEM Edge report. We'll be talking this week more about commodities, what to be on the lookout for with energy, and those healthcare names that are really taking shape. Have a great weekend, and I'll see you here next Friday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.